So, what are likely to be the hot topics of discussion for the G8 summit? For some insight, we've invited back John Authers, the investment editor of the Financial Times. Good to see you again.
Good to be here.
We just heard how a number of nations in Europe basically are trying to deal with their economic downturn. Some of them are resulting in stimulus programs, others are making budget cuts. The European countries, though, have been criticized that they still haven't done enough. Why is that?
I think particularly in the case of Germany, it's because they entered the crisis in a different way. In the case of Germany, house prices there actually fell slightly during the worst years of the housing bubble here in the States. The consumers weren't overextended and overheated in the way that they were here, and so there isn't the same need for an aggressive stimulus. The other thing you've got to remember, particularly in the case of Germany, is that they have a cultural aversion to inflation for very good historical reasons, which is goes much deeper than it does in other countries. They really don't want to risk a return to hyperinflation.
It helped to lead to the Nazi
Exactly.
Party. There seems to be a sense in this G8 as we get started that they're sort of going to lessons learned. Might be a bit premature for that, but still. What sort of new regulations are we likely to see out of this?
Well, they're discussing, although we're not going to see anything concrete this early, whether the dollar should continue as the reserve currency for the international foreign exchange system, or whether there is a way of moving to a more broad currency basket. There was a lot of noise about that before the summit. That's the kind of thing that will take many years to deal with. I think if there is a practical measure that people are discussing at the moment, it's probably the oil market. Oil is obviously as international a commodity as it gets, so there's no point any one nation trying to deal with this problem on its own. There's been exceptional volatility in oil over the last 2 years, which has made it very much harder for policymakers, and you probably will see attempts to work out whether we need more regulation in the oil market, how that should work, and how to avoid that becoming counterproductive.
China's leader had to leave and go back and deal with domestic emergencies in China. What impact is that going to have?
It continues to make the summit that much less important than it appeared to be before. The central dialogue, the central duality in the world economy at the moment is between the US and China. If the most important people in China are not available there, that continues to reduce the chances that something truly substantive will happen. If you look at the capital markets, they've generally worked on the assumption that this summit isn't going to decide anything of any great importance.
And getting back to Germany, some have suggested they have not fully yet acknowledged the problems that exist with German banks.
I think there's certainly some reason to argue for that. The German banks, right 2 years ago now, when the credit crisis started, turned out to have overexpanded into what we now call the toxic assets that were largely came out of the US. But I don't think it's just Germany. I think there are issues around quite a lot of the Western countries about whether the banking crisis really is behind us in the way that people have been lulled into believing for the last few months.
John Authers, thank you very much. Good to see you again.
Thank you.